Hello friends, welcome to this video in which I will take you through NISM series 10A, which is about investment advisors level 1 certification. This video relates to chapter 8 of the book. This chapter is very extensive, so if I have to make one video covering entire content of this chapter, that would run into hours. Okay, and also the questions would be more than 100 on one chapter alone. So what I've done is I've just created 10 questions to get you a feel of what type of questions to expect in this exam. Okay, well, these are only indicative questions. They are not from the previous year paper or something like that. So you will get a good understanding of how much you have read so far about this particular chapter, and can you relate to the concepts which I will be covering as I go ahead. So let us start with the first question. Which analysis will calculate intrinsic value and check whether the company's stock is undervalued or overvalued? So there are different types of analysis which are done. Obviously, technical analysis and fundamental analysis are two core types of analysis which is done. Industry analysis is done only for a specific industry, while SWOT analysis deals with strength, weaknesses, opportunities, and threats. So let us come to the conclusion that it's the fundamental analysis which helps me to calculate the intrinsic value and find out whether the company's stocks are overvalued or undervalued. Which of the below mentioned statement is not true about savings? Well, savings is what is very helpful in creating future wealth, but does savings automatically result into future wealth? The answer is no. However, we evaluate the options. Income minus expense is savings, which is correct. Savings of government is called as public savings, third option, which is also correct. Savings are to be channelized towards productive options called as investments, which is correct. So obviously every saving is also an investment is not correct. We go to the question number 3. Which of the following statement is false? Okay, so you have 4 statements. Which one is false? First statement says fundamental analysis is focused on computing the fair value of a stock to find out long-term investment opportunities, which is what is the core of fundamental analysis. So this option is correct. Fundamental analysis will observe price and volumes pattern, points of supports and resistance level. Well, this is what is done by technical analysis. So this particular statement is not correct. Okay. However, we will look at the remaining 2 options also. Fundamental analysis will study capabilities of management to exploit growth opportunities in industry. Obviously, when we do the broader analysis of company, we look at how strong is the management. So that's a factor. Industry analysis and peer group comparison is part of fundamental analysis, which is also fair. Question number 4. Which of the following policy measures of government deals with revenue and expense? So there are broadly 2 policy measures that we need to know. One is fiscal, second is monetary. Fiscal policy measures are government policy measures, and monetary policy measures are measures of central bank mostly. Export import is more to do with Commerce Ministry, and tax policy is just one component. There are no expenses here. So we go with the option C here. The next question is calculate the dividend yield for a company that has declared a dividend of rupees 3. Now when you calculate dividend yield, you need to know 2 things. What is the dividend per share and what is the market price of the company? All remaining information does not have much of significance here. So 3 upon 50 into 100 should give you what is called as dividend yield. So if you want to find out dividend yield, you will have to look at 2 things: the dividend per share, the market price. So the answer here is 6%. Okay, so what I said just now is that you need to take into consideration 3 divided with the market price, which is 50, which has been given here, right? So you will use 50. Okay, and once you have this 50 in place, then you have to multiply this further by 100, right? So that's what should give you dividend yield. When we add market capitalization of a company and total debt and deduct cash available with the company, we end up getting what? So this is a formula which is used to calculate enterprise value. What is enterprise value? The total value of equity, okay, or market capitalization of a company plus the debt. Okay, so you will add the debt here, okay, and this is plus, okay, and then you will deduct from that, which is minus cash. So that gives you enterprise value. Intrinsic value is more of a what you call as hidden or inherent value of a company. Book value comes from total equity and the number of shares. And net asset value is nothing but total assets minus total liabilities of a company, right? So this is your 6 questions that we have done. Seventh one, what is equity risk premium? Equity risk premium is a concept which is explained by CAPM, capital asset pricing model. So equity risk premium is what we call in technical terms as RM minus RF, which is market return minus risk-free return. So we'll straight away select this option, which is the D. Okay, so estimated equity returns and risk-free returns are not what we call as the equity risk premium. Estimated equity returns and estimated bond returns is also not there, and required returns is also not the answer. So this takes us to question 8. Ravi has been instructed to use absolute valuation models and not relative valuation models. Okay, so in this, which of the following is not an example of absolute valuation model? So it's very clear that price to earnings is a relative valuation model. So we can, because it compares companies' performance with the peer group, right? So in price to earnings, you see how is company A vis-a-vis company B vis-a-vis company C, and then you arrive at a conclusion about whether the company is undervalued or overvalued. So this is a relative valuation measure. Others are absolute valuation. Absolute valuation means they are only looking at that price derived from that model and not comparing it with any other model. Question number 9, which of the following mentioned model can be used for high volume, low margin business? So if you have high volume business but your margins are low, it is suggested that you use P, price to sales. Why? Because you'll get to know, because your profit has not been good enough, so market will look at your sales volume and try to price you, right? The next one, which is the 10th one, okay, is which is the appropriate industry specific valuation methods used for capital intensive business like cement and steel. So cement and steel typically get valued, while DCF is also used. You can use PE and PEG also, but replacement cost method will be more effective for a business like cement and steel, because it's a capital intensive business. So that is the reason it will be more effective. I hope you could get some sense about what you need to prepare for chapter 8. I'll put more questions going forward. I hope you found this video to be useful. If so, please subscribe to this channel and like this video, and do not fail to recommend this channel to your friends. Thank you.